In this session, I will be analyzing and trading live. So if uh, if you have any currency pair you want me to analyze, or if you have like if you have more of what you want me to talk about, like any kind of currency pair, any kind of strategy you want me to talk about, yeah, you can be mentioning them in the chat box, so I will be able to talk about them after the session. Either questions, either what you want me to talk about in the session. Like, make sure you, you type them in the comment section. So I will be talking about them in the session. And as well, for those who have already joined, let's start the session, and maybe let's wait for the 2 minutes to finish. Let's wait for 2 minutes then for the other members to join. Then we can start over. 2 minutes to go. 2 minutes to go. 2 minutes. Then we can go ahead. As well, for those who haven't or who are already joining for the first time, for the new members or for those who doesn't know anything about forex trading, let me know. Let me know in the chat box. Like for beginners who doesn't know anything, so that in the time when I'm always starting the session, like ku bantu batazi forex trading iki cyangwa batazi ikintu na kimwe kuri forex trading, akenshi iyo ntangiye session nkunda kubanza kugira session y'iminota nk'itanu cyangwa icumi, nkabanza nkabasobanuriramo, nkabanza nkabereka nyine uburyo forex trading ikoramo, kugira ngo nyine dukomereze, like dutangire twese turi on same level. So abantu badafite cyangwa se like abantu batazi ikintu na kimwe kuri forex trading, baze kunyandikira muri chat box hano, bambwire, then from there ndamenya where to start from. Harumbajije ati hari ikibazo njya nibaza, niyo ukoze buy you get your profit or you wait for sale to get your profit. Oh, I guess this is yeah, I get your point. Someone asked me to say, like, if I get to enter in a trade, let me say in a buy trade, should I get my profit either when there will be a sell setup, or I have to wait? Like, this is to mean if I'm in a buy, I have a certain place or I have a certain level where I have to take my profit, or I have a certain level where I have set it that if the market hits to that same level, I will cancel the trade. Igihe cyose ndi muri trade, ugasanga maybe niba ndi muri buy, urumva ndava muri buy igihe ndabona yuko like a level. Oh. Mm. All right. Ntabwo nari ndi kuvuga, ni wari uri kumpamagariramo, niyo mpamvu nari mbanje kuba Kuba meetings, eh? That's why. All right. Like, if you, I will explain this one. Someone who asked me about this question, I will explain it into the session. So right now we can go ahead. Today, I want to talk about like how do we grow a small account, or how can you grow a small account if you're trading. How can you get to grow a small account? Like most of people who already maybe have like a very like let me say we who have limited capital, like who already have like let me say capital which is maybe less than even $10. You know the maximum. So in such forex trading like brokers or this accounts whereby you can just open to access your money, which we call them blockers. For those who doesn't know anything about trading, we call them blockers. Like most of the time they do have a minimum of a $10 deposit, like a minimum of $10 deposit. To mean they are giving limits to traders that they can only like a trader who is allowed or someone who is allowed to trade is if they have limit of $10. You get my point? So now in $10, this is a smaller account. This is the smallest account in trading, whereby it's different from maybe synthetics trading and the other kind of tradings, whereby you can now access to like to even deposit $5 and things like that. It's possible. But now in general, we all know that trading is like to for you to start trading, you need to have at least a capital, smaller capital as small as $10. $10, that is the smallest capital. So now you can ask yourself, how can I use $10 for me to make $1,000? How can I use for me to make a high capital, or for me to like to be able to like to create an income which is appropriate for me? How much do I have to invest, or how do I have to start with a big capital, whereas I have a small account as small as $10? So today I'm gonna talk about how can you grow that small account to a bigger account. Which steps do you follow? It doesn't matter if you have a very limited capital, a very small capital, a very like less than $10, less than $5. It doesn't matter. Like today, I'm gonna talk about the steps you can follow, or how can you grow a smaller account from a smaller, from example, from a $10 to maybe a $50 to maybe $100 to maybe like to a greater or a bigger account which you can access to start trading professional. I mean, uh, like to say, let me say you have maybe like a bill limit of maybe like a $200 per month. Like you have expenditures or bills or maybe $200 or $300 per month, which you have to pay per month, for example. And you have small capitals, or you want to risk. It's not like maybe you just have a $10 only, just you want to risk maybe $10 in your whole trading journey. Let me say you just want to start with $10 to start to elevate from there with an account of $10. How can you grow such account? How can you grow such account without you making yourself, or without you like putting yourself on pressure to the extent where you can end up growing an account? Get my point? To the extent of you borrowing the account. You're getting my point? So from there, that's what I'm gonna be talking about today. That's the session of today. So make sure, make sure you get or you have a journal or somewhere you will write note down some important tips which you will be able to where you'll be able to just as well to note down some important information you need to know, or you need to know that you need to have. Otherwise, this session will be recorded from the starting to the end. The session will be recorded for those who won't be able to join the session on time, or for those who are already in their work, or for those who are already in their jobs. After the session, I will post this session in the group, so you will be able to like you will be able to watch the session. So for those who are already on their work, don't worry about that. The session will be recorded. When it's done, I will share the session in the group, the full video in the group, so you can you can uh, you can be able to watch, cheat out if you missed it. So as well, before we start over, This session, I'm gonna be using most of English and Kinyarwanda as well. I'm gonna be mixing Kinyarwanda and English because I know these are the most members I have in this session. Most of the members in this session uses English and as well they use Kinyarwanda. So for those who are not comfortable in English, for those who are not that fluent or who are not that better in English, they will let me know so that we can go ahead with it. I can be able to try to manage everyone in this session so that we'll be on the same level. Someone asked me to say, I have seen that you trade volatility index through derivative broker. I want to know how to open an account. As we know, is it not allowed for Rwandan? I guess currently Rwanda was there like before these issues of Rwanda and Congo's things. Rwanda was there, but now it's kinda right now Rwanda is restricted from like Rwandans are restricted from opening an account on Deriv. Right now, even if you try to open an account on Deriv, you won't be able to verify your documents because Rwanda is not there currently. Maybe after some time when these issues are already solved, maybe Rwanda will be back again there. But right now, currently, Rwanda is not allowing or is not uh Rwanda right now is not on the list of people who can register for the deriv blocker. But now it's easy and simple. If you want to open an account, you can still use your account. You can open your account with deriv broker, and then from there, you can do it. From there, you can use the documents of another country. Like you can select another country and then use or submit your documents from Rwanda. What they need to know to confirm is who is like who is who is the user, like who is using the accounts or who is the one who is opening the accounts. Like they want to know the person who is using or the user who have opened account with them. So most of the time they don't check your country or what. Sometimes you can use another country, like maybe your neighborhood country. It's possible. It's also possible because daily, I guess, derivative broker they use like sometimes you can even text the the customer service and tell them regarding my country is not being like I can't see my country for me to access to upload my documents. So help me verify my account manually. They will do that. You just submit them your details and whatever, they will verify your account and then you start trading. It doesn't matter because what they want is not for you to verify whatever. What they want is your money. You get my point? Because they're expecting you to lose in the market. You get my point? Because they are expecting you to lose in the market. So it doesn't matter if they verify your account or not. So that's kind of like a trap for people who doesn't know how to trade. They're expecting you to lose that money you want to deposit in their accounts. So they will verify your account as fast as possible. It doesn't matter then, like that. Get my point? So what you need, what you have in the first place is for you to know, do I know how to trade in the first place? Otherwise, opening an account is something simple. Verifying an account is something simple. What they need is your money. What they need is your money. What you need yourself is to make sure I don't want to give them my money. I know how to trade. I'm opening their account. It doesn't matter if they are verifying my account or not. What I know or what I'm focusing on is to say, I want to make sure I know how to trade. I know how to move money or I know how to take money from them. It doesn't matter whatever they do, if they're manipulating my accounts or what, if they don't. What I know is that whenever, whatever they can do, they can't take money from me because I already know how to trade. Someone asked me to say, do you know SMC model? If you can, this can be a limited session whereby if we talk about SMC, there are people who doesn't use SMC from here, and this group or this session is more of a like in general is more of general skills I want to give to everyone who because maybe someone is using a different strategy. So from here I want to be talking about in general as any or everyone's strategy. I'm gonna talk in general, unless maybe I can have a session talking about SMC. So for those who are already interested, they can join that. But now I can't take a session talking about just only SMC because I know There is some who doesn't know use SMC, or some who are not even interested in using or running SMC. Unless if I arrange a session for SMC, or either if you want to learn or know more about SMC, you can also join my academy, because I already have classes for that. If you want to learn the strategy kind of session, kind of strategy in detail, I have an academy which teaches people how to trade from zero, from scratch. You can join and start trading. Either if it's either if it's starting to trade from zero, if you're starting to trade, if you are an intermediate trader, you already know how to trade, but you are not profitable yet. I have such classes which you can join and then improve your skills. And I also have a community which you can join, because trading, you need a community. You need to have a community to push you up. You get my point? For you to cancel these mistakes you normally keep making, this is when you need a community. For you to discuss, like, you need a community. You need a skilled people, or you need skilled community who need to be pushing you up for you to be able to do it, for you to be able to, like, to elevate in forex trading. Ati kuko nzi basics, but I want to learn strategies and applying it. Yeah, actually, in first place, strategies doesn't matter. What matters is how you approach the market. If you know SMC, if you know how to, if you already know a strategy from A to Z, it doesn't matter. What matters the most is, do you know how to apply that strategy? Do you know how? Because the most important thing is for you to know how to apply it, connecting it with your risk management and your strong psychology. Because however I can rate my tradings, I can firstly talk about, maybe if I want to start to trade myself, I most of the time focus on how is my risk management in the first place, my risk management in the first place, how is my psychology on this trade. If, for example, I want to talk about, maybe I want to enter in a trade, and I already know that maybe if I'm a counter trend, I'm a trend trader, and I'm entering in a counter trend trade, for example, just because I saw a setup, maybe I want to take advantage on the market pullback. For example, if, like, maybe the market is pushing to the upside, this is an uptrend, right? And I'm already in an uptrend trader. And then from the higher time frame, for example, the market starts to break lower lows to push to the upside. To me, on the higher time frame, I'm expecting a pullback, right? Like, I'm expecting a pullback and the market starts pushing to the upside. I'm expecting the pullback because the market have been pushing, have been buying, it have overbought. Now it's gonna start to push the downside to make a pullback and then keeps pushing to the upside. You get my point? So from there, in the lower time frame, let me say if I trade 30 minutes time frame and then I observe a pullback on this certain level, to mean at a certain point right now, the market is going to pull back for some time and then keep pushing to the upside. So from there, if I'm already a trend trader, and I already know that the market is pushing to the upside, like the market is trending upwards, from there, I will have a certain psychology, or I will have a certain psychology goes with trade management, right? I will have a certain way I will enter in the market as a trend trader. I will now come in a counter trend. Counter trend to mean I'm entering in a trend, like a market setup which is against my trend. That's what we call counter trend setup. Like, it's a counter trend. You get my point? If I'm in uptrend and the market want to pull back and I want to enter in a downtrend, maybe sales or shorts, that's a counter trend trade, right? So from there, I will have a certain psychology which I will use for me to enter, or for me to use counter trend trades, because I want to be having a target, because I don't know how far or how long the market will pull. Let me say, for example, let me differentiate this for you. For example, if, for example, like, I already know that, this is my, my market is pushing to the upside. This is an uptrend. So to me, this is, if the market is at this level, this will be my target, right? I already know this is my target because the market is pushing to the upside. A higher is breaking what? Higher highs. The market is breaking the higher highs. So from there, if I enter in a buy, I already know this is my target. I'm already aware of the target. But different from when the market will be reversing or making a pullback. From here, the market is pushing to the upside. The market is pushing to that. Suddenly, it starts breaking the lower lows. to mean the market is gonna create a certain pullback at a certain level. I don't know where it will push, or I don't know the target of where the market is heading because it's a pullback. It might just break to and then start keep pushing to the upside. It's possible. So for me, I have a certain way, or I have a certain trade management which I use, because counter trend, I won't be having targets because I want to be targeting this level to mean the market is gonna liquidate this level. I'm not saying this because it's a pullback. It can decide to just pull a little bit and keep pushing to the upside. The market wanted to rest, and I don't know how long the market will rest, which is I call it in the form of pullback. So since I don't know how long the market will rest, this is when I will now consider to say, okay, I will first of all lower my risk. I have to know if I'm a trend trader and I want to take an advantage of the trade. Let me say, for example, if it's a counter trade, that is to mean there will be a breakout of the uptrend line, then which is my support trend line, pushing to the downside as a pullback. So if I want to take advantage on this trade, this is when I need to consider to say, okay, uh now I want to consider now to like to lower my risk because I don't have a target because the market is making a pullback, but I want to take advantage on the trade. You get my point? I want to take advantage on the trade, and then from there, this is when if I decide to enter in the market, let me say if I decide to enter on the pullback, and then I mean on the retest of the broken level, support level, which is my uptrend line, and then maybe I will make sure I lower my risk, and then at least I will target like I want maybe focusing on maybe the maybe this certain level. I will target at least the amount I'm willing to make for that day. For example, just for example, which is not higher. Like maybe say if for example my risk reward is 1/2, and maybe I already know that this level won't give me 1/2, right? I can even consider to say because I'm already a trend trader, but I'm taking advantage on the market. For example, I'm taking advantage on the market. Taking advantage on the trend, which is against my trend, which is a counter trend. I'm a trend trader, but because I have to follow my strategy, I have to follow my plan. I'm entering in a counter trend, maybe for me to maximize my profits, yes. But then for me, I will do what I will consider now to, if I'm entering in the market on a certain retest, I will enter. If this level won't give me at least a better risk to reward, I will consider at least to manage my risk accordingly. Like at least to manage my trade accordingly. Like that is the way I will just watch how is the market behaving through the process of the trade. How is the movement of the market? I consider even to work on trading stop losses because I'm trading against my trend, which is against my plan. Now I can consider to say, since I want to just maximize my profits, let me just uh lock if I get the chance whereby the market have already moved out of my entries, I will consider maybe if the market moves at least one on one, I'll consider rocking my entries. This is to mean I will move my stop loss from its level to the break even, and then I start to trade my stop loss because I don't know how long the market gonna push because the overall market is uptrend, but I want to take advantage on the counter trend or the pullback of the market. Otherwise, I'm not even interested in me taking this trade. But because when I need to take advantage on the trade, I lower my risk and then take advantage on that pullback and then maximize my profits from there, which is different from me knowing that I'm trading the trend whereby I already have a target level. So to me, I already have a strategy, but for me to apply it, it doesn't matter the strategy I have. For me to apply it, I need to know what am I how is my trade management, or how am I managing the risk in the first place? You get my point? So regarding you knowing how to trade using SMC, you knowing how to trade using whichever the like the strategy, it doesn't matter. What matters is for you to know how do I know how do I like accumulate, or how do I come to manage my risk? How do I manage my trades? What are the considerations, or how better am I when it comes to managing or to take decisions in the market? Because the market doesn't matter you use SMC, it doesn't matter you use which kind of which kind of uh strategy. It doesn't matter. What matters is for you. Do you know how to manage your risk? Do you know how to manage your trades in the general? Do you know how to take decisions in the market? Once you are in a trade, how do you manage, or how do you treat your trades? That's what matters in the market. Otherwise, you might have a good winning strategy or whatever, but you doesn't know how to apply it, or you doesn't know how the market structure or price action. That's why most of the time, whatever, even whatever I teach my students, I do focus on I do focus on I do focus on me first of all, depending on any strategy I'm teaching them, it have to follow the market structure. You get my point? It have to follow the market structure. Because if I'm applying, first of all, let me say in real life example, if I want to just bring an innovation in a certain place, I need to know first of all what is the structure, or what is the kind of innovation? Is it fitting the same, like the same environment I want it to work on? Like if, for example, I want maybe to just in real life, for example, maybe I want to sell cars, or I want to open a shop of cars. There's no way I will just go in the village and open a shop from there, because I'm just targeting wrong audience. Just that's an example. So there is no way even me I would just come and say, because the market structure, this is the basics of trading. So whatever the strategy you have to find out, it have to follow the market structure. If your strategy is telling you to sell, whereas the market structure is not in a selling position, don't take that trade. Whatever the strategy you use, you need to know that you need to follow the market structure in the first place. So let's go ahead with today's session, whereby I want to talk about how can we grow, or how can you grow a small account, or what are the steps, or the what are the like the strategies or tips for you to grow a smaller account from a small as $10 to a bigger account of maybe, let me say, from $50, $100, $500 to whatever. If you remember in the last video, I even shared in the group, I guess it's last week, whereby I had $6 in the account. I think I traded that account live in the group. I could I could post. It was $6. I pushed it to $40, 40, $100, 200, $300, until it reaches to $600. When it started to show me reversal patterns, that's when I was out of the trade. Otherwise, I wanted to keep it to move to $1,000. That was my target. From how many? From $6. If you want to watch how I traded that account from $6, visit my Telegram channel. You will see it. The link will be. I will share the link from here. If you haven't, if you're not in the if you're not in my Telegram, so that you can go and watch it from there. I traded an account from it was small as $6. That's how much Rwandan francs. $6. That's nearly uh $6. That's like is it 10,000? 8,000, 9,000 somewhere Rwandan francs. $6. That's like 9,000. From 9,000 Rwandan francs to nearly 1 million Rwandan francs. From 9,000 Rwandan francs to nearly 1 million Rwandan francs. You get my point? Are you getting the sense, right? From $6 to $600. That's nearly almost 900K something, almost 1 million Rwandan francs. You get my point? So that's the skill set you need to have in general. So in the first place, I want to make a simple illustration from here of how I manage my trade, or how I enter my trade. Because whatever I use to grow my account, my small account, is by use of market structure. In the first place, this is market structure. You need to consider market structure. Someone was asking me to say, and Hari link your community, how can I join? For you to join the community, for you to join my community, this is when you need to join my academy. You just need to join my academy. It's to just register and join my academy. This is how you join my my community of traders, and that's how you learn, that's how you apply your skills, that's where you come to become a trader by yourself. You get my point? And you can talk about risk management. I will do also talk about that risk management for me too, for you to elevate from there. So now let's go ahead let's go ahead with the like with the session whereby I was talking about as how can we grow a certain small account to a bigger account, or what do you consider for you to grow a small account as well. Most of the time, for someone who asks me such question, most of the time I do this same such live tradings and live analysis. I'll just be trading live and analyzing live with my students so that they can get to understand and practice more with me, not just to send them signals or not just to send. I do analyze with them live so that you can apply the skills from there. So in this session, make sure you have at least a journal or somewhere you will be noting down the important tips. So for you to start trading, or for you to, in general, for you to start analyzing the market, you need to know that, okay, you need to make sure in the first place, what are the days of the, like, what are the, this, because this is the website whereby this is Forex Factory. This is the website whereby we come and like look around with, we come and get informed on what is the general fundamentals present in the market. You get my point? Before we start to analyze or before we start to enter in trading, we need to first of all know what is the fundamentals present in the market. What is the fundamentals present in the market? We want to know in the first place which time of the day the market will be more volatile, which time of the day the market will be less volatile, which certain currency pair will be less volatile or we won't be active. Because this is where we come for, like, for example, this yellow, they show low impact. You can see it from here, right? Low impact. To mean this news will come in a certain period of time whereby they won't be affecting the market. And these are currencies. This is the certain time of the day where the news will be released. This is the date. Today is 18th, right? This is the certain period of the day where the news will be released. This is the time. This is the currency pair where the news will affect, and this is the impact it will do on the on the certain uh on the certain currency or on a certain market. So, and then these details, these are just the results of what is expected to happen, like the forecast and the previous whatever. So from here now, what we focus on is the currency and the impact. First of all, if maybe we want to start to trade for the day, and we already have, maybe let's say, for example, we trade AUD, USD, or we trade JPY. Like, for example, this is AUD, right? AUD, JPY, this is Japanese yen. You get my, this is AUD, Australian dollar. You know that, right? JPY, Japanese yen. If you already maybe trade for example, I trade GBP USD. For example, I trade GBP USD. I will come in this on this website. This is a website where I get informed on the daily fundamentals or how the market will be acting in the first place in general. This is a Forex Factory. Let me share the link in the let me share the link in the group. Let me share the link here. I have already shared the link. This is where you can go and get informed, get these informations of what is going on in world economy. You have seen the link, right? That's the link I have already shared in the chat box. You can go and check. This way, every day when you want to start to trade, you need to first of all get informed. How will the market be acting? If I trade GBP USD, that is to simply mean that's a currency pair. I have GBP and I have USD. I need to know how will GBP will be acting for today, and how will be USD be acting for that same day. If I trade GBP JPY, how will JPY be acting for that day? Which time of the day will it be having a high impact news or low impact news, for example? Or for example, if I trade any currency pair which involves CAD, you can see that at 6 p.m. Kolkata time, 6 p.m. CAD, Canadian dollar, will be having CPI, high impact news. You can see that it's red, right? Here we have options of yellow, which means they are low impact, they won't be affecting the market. And we already have this one, which is like orange. This is medium impact. The market might move Not that so much. There is a certain time of the period whereby you will be trading and then you find a certain spike, like the market moves so fast in the way you doesn't know anything about it. This is when the high impact news have came in the market, which they will invalidate either they will click your stop loss, like they will liquidate you, to mean they will just move out of you out of the market without you know what's going on, or just they will invalidate like they will invalidate your technicals. Maybe if you have analyzed, you have found like your you have found your resistance levels or support level, it won't care about that, right? It will invalidate your levels. So from there, you need to know which time of the day I need to avoid trading at this on this certain currency. If I know that card, I have a certain currency pair where maybe I want to trade USD card or card USD, for example, and I already know that card Canadian dollar will be having high impact news at 6 p.m. This is 6 p.m. Right. So I need to be avoiding this certain period of time whereby if I'm not a fundamental trader, because there is some which are fundamental traders, which they have to be active at this certain period. But because I'm not a fundamental trader, I'm a technical analyst. I do analyze the market by use of technicals, and I want to avoid this kind of durations whereby the market is moving so fast to the extent where it doesn't allow me. For example, if this session is based on us growing a small account, we don't want to enter in a trade if we entered with a certain small lot size and the market moves so fast and it blows up our account. We don't want to experience that. So we want to enter in the market where the market is moving smoothly, where the market is not getting high volatile, whereby we can decide, we can look on the market structure and decide when to enter the market. You get my point? Decide where to add the position. Decide of where do I have to like to add the position, or where do I have to move out of the market. If this certain if this certain trade is going wrong, where do I have to move in the market? Just move whereby you can grow your account with as less as $5. You get my point? As less as $5. You should have seen how I grown my account from $6 to $600. So it doesn't matter if you are in this session, if you have as small as $6 or as small as $10, you're going to start to trade confidently with as small as $10, and then you can start growing your account to wherever you want it to be. What you need to know, first of all, this is the first tip. You need to first of all know which time of the day will I avoid this certain currency pair. If I want the market to run for a certain period of time, I don't want the news to come, and if I'm already in the profits and the news moves so fast and come to my losses. You get my point? So I need to make sure in the first place my market is calm for the day. You can see whatever I will be trading, I will be avoiding trading card, because card will be too much volatile and it can invalidate my market structure. You get my point? First of all, we need to, that's the first tip. First of all, we need to know which time of the day the market will be less, or which time of the day the market will be high volatile. As well, this website also show us which certain currency pair won't be active, to mean which certain currency whereby the market will be off, or whereby the market will be not whereby the market will be having maybe a like a holiday, whereby if a certain currency is having a holiday, maybe let's say if you're having holiday on USD, every single currency which is in which involves USD won't be active. Mostly won't be active. I mean, there is no activities going on in the USD currency which can lead to the market to move. So the market won't be active in that certain period of time. You get my point? Apart from gold, apart from gold, for those who already knows how to trade, who already trades, who already normally trade, they know why I'm laughing. Apart from gold, apart from God, God is very stubborn, whereby it can even move even if every single, every single, every single, every single currency is at a bank holiday. It can even make spikes, and you ask yourself what's going on. Remember, that's how unique is God. That's the currency. That's even why I like God. That's why I even like to trade God, because that's one of the most volatile currencies, I mean, the method, that's a method, right? But it also do have a currency pairs as well. You can pair it with currencies like gold, USD, gold, euro, something like that. You get my point? So from there, that's when now I need to know, first of all, what is the day, the exact time of the day the market is active. You get my point? Or what is the exact time of the day whereby the market is gonna be bringing fluctuations in the market. After me making sure about that, now this is where now I'm diving in the chart. I'm diving in the chart for me now to know what is the market structure present in the market. What is the market structure? The first thing we have to know, what is the fundamental saying for the day. I need to first of all make sure that the market won't be that much volatile. I want to act in the market which is very calm, which there is no more fluctuations, or there is no more more market manipulations whereby the market can start to invalidate me, where without even like without caring about my levels or whatever. You get my point? So here I need to make sure the market is at a shield level. You get my point? So from there, what is there? I now have to know what is the market structure. What is the market structure present in the market? If for example, I'm trading and the market structure is pushing to the upside, to mean that I'm in an uptrend, right? After me knowing the uptrend, or I'm in a certain I'm in a like my trades or my currency pair which I want to trade is in an uptrend. The market structure is breaking the higher highs. You get my point? It's breaking the higher highs. To mean I do have certain levels whereby the market is pushing to the upside, like the market is creating impassive moves, corrective moves, impassive moves, corrective moves, impassive move, corrective move. Like impassive move to mean this is a movement, impassive move, this is the movement which heads to direction of my trend. And then corrective move, this is the movement, it is like a counter movement which reverses or which creates a pullback in the market. Impassive move, this is a move or a direction which creates or which follows the trend. You get my point? To me, impassive, this is my impassive move, right? You get my point? This is my impassive move. And then corrective move, these are my corrective moves. Corrective move. You get my point here? Collective moves. The market is creating a pullback. Corrective move. You get my point? So now, after me knowing the market structure, where the market is heading to the upside, to mean it's breaking higher highs. It's breaking higher highs, which are these levels, right? These levels. The market is breaking these levels. The market is breaking these levels. It's targeting to break these levels. The market is targeting to break these levels. So to mean if the market is, sorry, to mean if the market is at this level, to mean the market, where the market is heading to, the market is targeting to break this level. You get my point? It's targeting to break this level. So if I already know that the market structure is an uptrend, now I already open a gateway whereby I know where the market is heading to. You get my point? I know where the market is heading to. The same thing I did on this trade, for example. Like, see how I already know that the market is pushing to the upside? That was my market structure. So whatever I was trying to do, I already know that this line, this is where the market was targeting. For those who already know how I trade, I do always uh, target this level. I do always point these red lines to mean this is where the market is targeting. If I'm in a downtrend, I will just know that I will be having a level where the market is targeting. So anytime I'm in a trade, I don't care if it's a 1 to whatever 2 risk to reward ratio. I will need to target, even if it's somewhere here, whatever it wanna be. I will need. Even there is another trade. There is a trade I took yesterday on like on GBP USD. You can see, I think this one I have shared it in the group to give me nearly 1,000 something dollars. So from here, this was the level. The market was at this level. This was nearly 1/4. This to reward ratio. Because of what? It wasn't hard for me to just move out of 1/2. Just imagine, this is 1/2, right? This is very small for me. Why would I keep this profit? I already know that the market is heading to this level. Why should I keep it? This was nearly 1/4. I just, already know I most of the time risk somewhere 200 to $300 per trade, every single trade. So now 1/4 to mean I targeted 1,000, somewhere 1,000. I have already posted in the group, right? You can check it in my Telegram channel. You can check it in my Telegram channel. I post everything, either my losses, either my winning trade. It doesn't matter. You get my point? So from here, what I did was to say I had to target. I already knew where the market is targeting or where the market is heading to. So I had to do it. I had to mark out my levels, and I already knew where the market is gonna head to. You get my point? So what is here is to say I already know the levels where the market is heading to. So anytime I'm analyzing or anytime I want to enter in a certain trade, I will be already having a target because my market structure already revealed me where the market is heading to. You get my point? So the second step is I already know what? I already know where the market is heading to. The market structure. I already know the market structure present in the market. You get my point? I already know the market structure present in the market. You get my point? So now what I need to do in the first place, now I need to now start looking for what are the available startups, or what is the available what is the available setup in the market. Which setup is available? If I'm already know that I'm in a buy, or the market is pushing to the upside, what is the startup for me? Because what I need to do, the strategy, how it works, if I already have a $10 account, I can open a 0.01, like a smaller lot size possible. A smaller lot size possible. I will be compounding my account, whereby the first trade I will take, that will be also be my stop loss. So what gets hard for me is now to start the first trade, to enter in a first trade. If I entered in a first trade, I will enter another one. Maybe for example, let me give an example on the already where I already entered from. Let me say if the market entered from here, I'm entered in a first trade from here. The second one I will enter it from here. The second one I will enter it from here. To mean, what is the story behind this? I'm using this profit to enter another trade. I'm using this profit to enter another trade. To mean, my stop loss, I already entered with a stop loss of smaller as 0.01. That's I'm using as my stop loss as my lot size market movement. If I entered with a lot size of 0.01, if the market moves from here to this level, this is to mean my stop loss was somewhere. If maybe my stop loss was I was supposed to risk maybe $2 on that $10 account, my stop loss will be as small as $2. If I entered with 0.01, my stop loss was as small as $2. And then the profits I will make from that same, if the market is at this level, let me say, for example, let me explain it properly. I have an account of $10. I have already mentioned it here. I have an account of $10. Now I want to enter in a trade because there is no way I can enter with a 0.01 on an account of $10. That is a risk management whereby I will need to enter with an account, a certain lot size, which will avoid me to borrow an account, or which will help me focus on the account. First of all, if I have an account of $10, I will divide it into at least four, let me even say two parts. It's okay for me to even, or let me say three parts, at least, or four. To mean I will be risking $2.5 on each trade. To mean $2.5 can give me somewhere $50. For example, see how I will make it. I will enter with a lot size of at least 0.01. That's the smaller lot size. And then I make sure I target a stop loss of at least, I make sure if my entry level, if I already have a setup here and my entry level is somewhere, my entry level is somewhere, uh, my entry level is somewhere at 0. Let me say for this level, to mean my stop loss is somewhere here at this level. So now what I will do, for me to enter in another trade, I will wait for the market to move at a certain period level, and then I will be compounding using the profits I made from the previous level. To mean if I entered in the market at this level, this was my entry point, and my stop loss level was this one. To mean I'm risking 2.5. If the market directly moves to my stop loss, I will only lose how much? I will only lose $2.5. Remember, otherwise, if the market will move in my direction, I wait for the market to move in direction, then I will use market structure to enter in another trade. If the market now moves from this level to this level, and then I will now be looking for another entry model. To mean the gap between this entry and this entry, the profits which is there, I will be using it to enter in another trade. So mean if there is a profit of $3, the lot size I will enter will be matching this $3 I already made in the first trade. You get my point? So to mean if I'm entering in the market here, I'll be using that same $3 to enter in the market. To mean if I have already made $3 here, I'm using this $3 to enter another trade. Not my account of $10. My account of $10 is already safe. I have moved my stop loss. My stop loss is now here. To mean even if the account, even if the trade comes back to my entry, I'm good. My $10 is already in the I'm already safe with my $10. So now my $10 is already covered. What I'm doing now, I'm now using the profits I entered with the first trade. If I'm up by $2.5, or if I'm up by another $3, now I will use this $3 to enter in another trade. To simply mean that if I will enter another trade after the pullback, for example, if the market structure, this is the market structure, if I will enter after the pullback, let me say if I already have a trend line from here, or I already have a certain, depending on your strategy, because it doesn't matter. This also on every strategy, depending on your strategy. If I already found another entry model, I'll make sure if I'm entering now another trade, another entry, now what I will do is I will now observe I will now look after, like I have already made $3 from the previous trade. This trade, the stop loss don't have to be here because there is a possibility, and you need to make sure if you entered with a 0.01, another entry you need to enter, it have not to be bigger than the one you entered from here, because there is a possibility for the market to move from here and reach to this level when it have already removed you more than the $3 you have already made. So you need to make sure the same lot size you entered from here is the same lot size you enter from here, because the same profits you lose, you are making here, if the market moves downwards to you to this level, it will move you out with the same amount of money you have made. Because to simply mean that if you enter from here, if you enter here, the loss, if the market reverses on you with another second entry, you will lose the same amount. You will compound with the same amount. If you already made $3, your stop loss have to be already $3. You get my point? And have to be $3. To mean if it will move you out with a $3 loss, or which is the profit you have already made, you need not to enter in your equity. Like don't need to enter in your balance. The market, you need to watch out your equity. You're using your equity to enter in another trade. You're getting my point. So if this is your second entry from here, you're using your profits you already made from this level, you're using these profits to enter in another trade. Let me say maybe the market moves and starts now. This is another entry. This first trade gave you $3, and then the other trade, let me say, moves from here to this level. Now you have already made how much? $6. You're already at around somewhere $16. You get my point? You're already at around $16. You get my point? You made $3 from this trade. No, it's not six. It's now $3. You're already at $9. Automatically, you are at $19 equity. Your equity somewhere 19, because from this first entry to this level, the market have already gave you $6. And from this entry to this level, the market have already give you $3. So you have $9 floating in your profits. So from here, what you can do, since you have $9, you can now enter 2 trades at once. If you get a better entry, you can now enter 2 double trades with a profit of $9. Now you have used on the first trade. You see what gets hard is for you to just now get an entry. Once the market have moved, now you will be using that 9. You are up with $9. Now you are going to use $9 to enter in another trade. To simply mean you can now use either 3 trades or 2 trades with a stop loss of that $9. You don't have to now to come back and enter in what? You don't have to come back and enter in your balance, which is $10. Remember that on when you were starting, your stop loss was $2.5. But right now, what your stop loss is now $9 because you have allowed your capital, which is $10, is already at safe. Now you are using your profits to enter in another trade. So you already have $9, which is you're up with $9. Now you can compound and now enter with 2 trades. You get my point? So now if you're following the market structure and then let's say the market moves to this level, let me say to this level, and then you are now up with this level. You entered with 2 trades here. Now the market is here. You are already $6. You are already $6 from the entry you made here. You are already $6. That's $12 from the entry you made here. And now you are $12 plus 3, 6, 6, 9. 12 plus 9. You are up with $21. So your whole, let me say just for example, from here, you are up by 30. You are up by $31. That's $31, right? You're up by $31. So from one single trade, you have already made how much? $31 plus $10, that's $41. So your balance right now is at $41. As simple as that. You get my point? As simple as that. You already made $41. So now your risk is gonna increase because you started with $10. Now you are now at $41. You can now decide to say, let me just withdraw my $10, which is my capital, and put it aside so that if I borrow this account, I will go back to my capital. So you are now protecting, you are creating a room for in case you can borrow an account, what will happen? Let me say, in case you end up in losses, what will happen? You have a backup, right? You are compounding your account, but you are keeping another account. You're keeping your capitals beside. If, for example, let me say, if you from here you started with $100, what will happen? If you started with $100 and you're already with $410, you get my point? If you're already on 400, that's you withdraw that 400, what that $100, which is your capital, and now stay with how many? Now we are staying with 310 something dollar. Then now if we have started with $10, now we are using what? Now we are using $30. Now we are going to compound our entries or our account using $30. Same thing we will do, we will now divide that $30 into 3 parts. Into 3 parts. You get my point? You will divide it into 3 parts. $10, $10, $10. You know you have already kept $10 aside. Now you're going to start risking $10 per account, per trade. You get my point? Now you're starting to risk now $10 per trade. You get my point? So what you will do is from there you will do what? Or let me say, for example, if you are, because I may say $10 depending on your risk management. I'm not saying depending on for you to grow a small account in a short period, or either let me say depending on the time limit you want to give yourself. Because if it turns out to a losing trade, you need to lose a small amount of money on your trade. Or let me say if it's $30, just now start compounding with $5. Just increase by 2 times. You started with risking $2.5. Now you are risking $5. To mean if the next trade comes into a winning trade, to mean you compounding such way, you will be making somewhere $80 or 100 up to $100 per trade. You get my point? So now you are compounding your account with a small amount of money. You get my point? So someone asked me, what do you say about margin call when you have a small accountability? I say small account. This is what I'm talking about. Margin call, you want to just enter in a trade. You don't want to maximize. You don't want to say uh uh you don't want to enter with a big lot size. You need to know first of all what is my account size and what is my leverage as well. Which a lot smaller lot size am I allowed to enter in my trade for me to be using my lot size, or for me you need also to access a broker which like which can give you a higher leverage. Because for you to do this small account, you need to have a higher leverage for you to enter in a like with multiple lot sizes. You get my point? So what you're doing from here is to say you're now compounding your account. You are using your small accounts for you to enter. You're using small accounts using a smaller lot size for you to compound your account using your profits to make other profits. You are protecting your like you are trying to protect your capital using your entries or using your account to do what? Using your profits to make more profits on your account. Is it getting sense? Do you see how now you can grow your account by use of market strategy? Mostly you need to use market strategy. You need to use market. You need to first of all know where is the market heading to. Get my point? So the same thing I did from here, if I would have been compounding my account, first of all, I had to know where is the market heading to. I already know that the market is heading to this level. So whatever the compounding I will be making, I need to, because I will do that mostly in the lower time frame. I need to do this in the lower time frame. For me to do so, I need to do this in the lower time frame. I need to know what are the levels. And I need to be sure that I'm not trading a higher volatile currency because you can't do this on gold. Unless you are trading for long term, otherwise you can't mostly trade this. Gold is volatile. You need not to take the market which is much high volatile in a certain period of time. You need to do this in a lower time frame as well. You need to make sure the market is not that much volatile, whereby there is no much news in the market for it to invalidate your setups. You get my point? So this is how you can grow a smaller account to a bigger account in a short period of time. If you can see the way I grown my $6 to 600, this is the same strategy I use. And I did that in a one single trade. I could wait for the market to give me another entry and I use my profits to enter in another trade. That's how I grown my $6 to a $600. If you remember, if you could go, I could just come and say, oh, from here, I just entered in another trade. I entered in another trade like that, like that, like that. You get my point? I hope you all are getting it right. And I hope it's getting clear as well. Someone asked, what steps do you use when analyzing time frames you use? When I'm analyzing the market, first of all, I do consider in general, uh, the I do use uh, I do use top-down analysis. I firstly mostly go in the higher time frame, and then I compound coming down in the lower time frame for me to know what is my levels, what are my levels of interest. For us, maybe let's analyze maybe one currency. Let me analyze for you. Mention any currency you want us to analyze, then we can analyze from there. Which currency do you want me to analyze? Then we can go ahead. Gold, all right. Someone said this is as well. This way in God. God is at a higher time frame. Anyone else? I mean, it's at an all-time high, 88. Which currency pair do you want me to analyze? Euro USD. US 30. All right. Which currency pair you want me to analyze? GBP, JPY. All right. Which currency pair you want me to analyze? Which currency pair you want me to analyze? GBP, USD, all right. GBP, USD, USD, JPY, USD, JPY, NSD card. GBP USD, GBP JPY, NSD card, US 30, Euro. Let me see. So most of you said GBP, USD, USD, JPY. Aisha Shalom, GBP, USD, GBP, USD. Most of you said GBP, USD, GBP, USD, Euro, USD. So USD, JPY. Tell us about market sessions if possible. Market sessions, like that means trading sessions, right? GU, GBP, USD. Most of you say GBP, USD, GBP, USD. All right, let's look after GBP, USD, and as well. Let's consider USD, JPY, USD, JPY, USD, JPY, and as well GBP, USD. Let's look after it. Let's start with. Let me see as well. I had GBP, USD here. Let's consider. We're gonna talk about GBP USD as well USD JPY. So let's start over with USD JPY. Start over with USD JPY. Let me see. Let me check out something. USD JPY. USD JPY. I will need to delete. I need to delete everything so that I can. All right. So let's go ahead with USD JPY. Let's analyze USD JPY. So first of all, what I do is normally I need to first of all I need to confirm what do we have on USD, what do we have on JPY. JPY today we don't have any kind of, so we are good on USD as well. We are good on JPY. So this currency won't be that much active. I mean, it won't be that much volatile, or it won't be having so much of so much of compliments. Let's see here. So we are good to go with USD, JPY, and as well we can trade it for the day. It's okay. No manipulations expected, as well no much volatility expected in the market. So we are good to go. So now let's see what I have to do. First of all, I need to know what are the levels or what is the market structure present in USD, JPY. First of all, I need to go in 4-hour time frame. I need to go in 4-hour time frame and see where is the market heading to. What are the levels? What are the general levels where the market heading to? For example, the reason why I will almost tell you like we need to first of all mark out the levels where the market is targeting or where the market is heading to. Since, for example, the last time when we was analyzing, I have marked this level because this is a higher time frame. If you remember, I have marked this level. This was my target level because if I can see from here, the market was already started breaking the higher highs, the highest levels from here. To me, the market was somewhere here at that time. The market was somewhere here. So what was here was to say the market was now gonna be targeting these levels because the market have started breaking the higher highs. See the same thing the market did. This happened yesterday, right? So now what I need to know now, since this level is already cut out or is already broken, now I need to look for where is the market now heading to. What are the levels where the market is heading to? Now we have these levels. I have this level. I have these levels, these two levels. To mean these are the levels where the market in general is heading to. This is the expected movement in general. This is what I first of all put in mind, that the market is now gonna push to the upside. In the long run, the market is pushing to the upside. So in general, what we have here, we have a downtrend, but we now need to take advantage in downtrend. What is the market structure telling us? Since the market is pushing to the upside, what is the market structure saying, or what is the general market structure? What is the market structure telling us in general? Since this level we had a level of support somewhere here. Since we have a level of support somewhere here, if you can see, we had the support level here somewhere here, and as well, the market came to retest from the support, and then it started pushing to the upside. To mean we will consider this level. Let me mark it out properly. Let me mark it out properly. So I already have this level. Yep. I already have a support level at this point. So, and if you can see properly, the market came to invalidate this level. It have already took out this level and now is keeping to push the upside. So to simply mean that in the long run, USD JPY is reversing to the upside. It have already liquidated our support levels. It have already liquidated this level. Now the next point is to liquidate, to start pushing to the upside. In the long run, these are the levels we're expecting the market to keep pushing to. Have these levels. These are the levels we're expecting the market to push to. So now if we come to lower time frame, or if we come to look after what is happening in general, we already have a higher time frame support level. Now the market have already broken this level. It was at this level, at this point, if we just move it to this level, to this point, we knew that we have a support level from here. The market came and started, it broke the support level, it pushed downside, and now it started the reversing. Like this was our support to resistance. It was, the market was a support when it was above, and then it broken, and then it became our resistance. From here, suddenly it broken our resistance, and now it's starting to become our support level. So to simply mean that what we have here, if now we are following the market structure, the market did what? The market did the market did a resistance to support at this point. We had the support level from this level. Now the market have shifted. It's gonna start to push to the upside as it have broken our resistance. Is now gonna start to act as our support level. It was our resistance now when the market was below this level. Now it's gonna start to push to the upside. Now it have shifted to our support level, which we had from here. We had a support, a resistance level. Now it have broken the level, is now it's gonna start to act as a support level. It was our resistance. Now it came back to our support level. So to simply mean that what we are expecting from here, the market structure whereby the market is pushing to the upside, we have a novel uptrend. Because this is on the higher time frame, we need to mark it as red. Because the higher time frame, I mark them as red for me to be notified in the lower time frame. So since now I know, or I have the levels where the market is heading to, if I can now zoom it for me to see properly, I already know that this is my support level. The market is at my support level. So I have now to zoom it, like to remove it a little bit for me to be able to access in the lower time frame. So since I already have my levels, I already have where the market is heading to, where the market is targeting. So the possibility from here, the market might now start pushing to the upside, right? You get my point? It might maybe do a reversal point, but now what the market is doing currently, the market is heading to is pushing, is breaking higher highs, pushing to the upside. Since we already have a support level somewhere here, the market might come back, push like this, come back to this level, break this support level, resistance level, and come back to retest this support and retest this trend line as well, and then start pushing to the upside. You get my point? So there is a possibility of the market doing such. So this is a higher time frame, right? So now since we know what the market is gonna do, now we shift to the lower time frame and see what are the market, or what are the available opportunities do we have in the market. So now we head in 1 hour time frame for us to adjust the levels properly and see where the market is pushing to. If you can see properly, this was from higher time frame, and we already have this broken level from here. Since the market have broken this structure, to mean it's expecting a pullback and keep pushing to the upside. If it doesn't break this level and it decides to pull back, the next move is to retest this level as well, retest this support level, and push to the upside. You're gonna have to break these levels. You get the next move, right? This is where the market is expecting to push in the next move of the market. So we are expecting the market, because it have overbought. If you see, this is 1 hour time frame, it have been buying. Here it was, I can't say it's a pullback because it haven't yet broke this structure. So I consider this as a single movement. This is a single movement because the market broke this structure at this level. This pullback happened before the market broke this structure. So I expect this as I suppose this as a single movement. This one is a single movement. So what I have here is the market to expect to push back to the upside and to keep pushing to the breaking these levels, this level and as well this level. Get my point? I guess you are getting how I do analyze and how I do come to decide where is the market pushing or where is the market heading. What you need to focus on, where is the market heading in the first place? By help of what? By help of market structure. I need to know what is the market structure present in the market. What are the points of interest? The points of interest we have right here is this level of support we have right here. Even I have removed it for me to see the market properly. Otherwise, I do have a support level right here, because it was a resistance when the market went down. By now, it's now my support level. So I'm expecting the market to come back to retest my support level and keep pushing to the upside. You get my point? This is my expectation in the market. And if you see properly, this will be nearly the third touch. So to mean the market is expecting to push back today, is expecting a validity from here. So what you need to see is, like what you need to consider is not to say, because just the market will come on this level, you need to enter in a buy. You need to confirm a rejection. To mean if the market come to our point of interest, I need to confirm a rejection. If I don't see a rejection, I won't enter in the market, because the market may come and keep pushing. So what I need to do is I need to consider a rejection. A rejection. For those who already say trades SMC, they can at least maybe wait for the market to create a liquidity pause somewhere there, and then there will be something like in a higher time frame, there will be a a demand zone somewhere here. I mean a demand zone somewhere here. If you see properly, you find a demand zone somewhere here. Depending on the where you normally, which time frame do you normally trade. So this is the expectation on the USD JPY. So now, because I do take my entries on 30 minutes time frame, I will now shift in 30 minutes time frame and see properly what is the market showing me. What is the market showing me in general? Now I need to mark out my lines properly. I need to mark out my lines properly. See from here to mark out my line properly, because I do take my entries in a lower time frame. So as well, for those who already trades, we do have a better opportunity from this level, because we at least have levels of liquidity somewhere here. Levels of liquidity whereby the market might come and target this inner or internal market structure. These are internal market structure. Come and liquidate these levels and keep pushing to the upside. Liquidity levels from here. So we do have a we do have a great opportunity on this trade if it comes back to test this level, and then we are good to go. So what we have here on USD JPY is we are expecting the market to break this level. This is our target. This is where the market is targeting currently. So if it doesn't break and keeps decide to pull back from this level, we can expect a pullback from the higher time frame. Otherwise, if the market confirms a Nina, we can also consider to find out a, let me see from here. Depending on how the market will behave from here, it can, if it breaks this level, if it decides to break this level, to be targeting this level. Otherwise, you can also consider a market movement or a rejection from this trend line. We do also have an inner trend line. This is an internal trend line. You can see, right? This is an internal trend line, whereby the market won't be completing a clear full, or even for it to come here or to test this trend line. This is when at least it will be coming to test our support level somewhere. You get my point? So these are the possible movements of USD JPY. USD JPY. So I don't know if it's clear on your side. Let me know if it's clear on your side. Someone said share the screen. The screen is already shared. I don't know. Sinzi niba utari kubona screen cye cyangwa hari aho itari kugaragara neza, urambwira mwambutsa Jean Dodi. Sinzi niba hari aho screen itari kugaragara. All right, clear. This was the analysis on USD JPY. Yeah, the screen is shared. Yeah, maybe someone was making a mistake. Hey, bro, once you finish that analysis, can you please provide someone free signal? Yeah, a signal is already here. This is a live signal. I'm analyzing. This is what I do. Like if I had to send a signal right now, this is the signal I will send, because I'm already analyzing. This is my analysis right now. This is the signal already given. Like the market have to come back to this level and then start pushing to the upside. Don't know if you can see from here. Let me know if it's clear for those who already trade USD JPY. For those who trade USD JPY, let me see your reaction. If for those who already trade USD JPY, let me see your reaction on this on this analysis. If you agree with me right here, let me see a reaction here. So can go ahead. This is the analysis on USD JPY. The analysis seems clear to me. Yeah, someone said it is yes, it is actually very understandable and it will be a buy. The analysis seems clear to me, but I think the general trend line would be safe than the inner one. Yeah, it will depend on where, it will depend on how the market will act on this trend line. Because this might be a liquidity, it might act as a liquidity, yes. So what we consider is how the market will act on how the market will act on this same trend line. You get my point? It will depend on how the market will act on this time trend line. So if the market breaks this level, that is to mean we will consider the higher time frame. Oh, I didn't. This is the inner, so this have to be blue. You need also to know how to control to manage your charts. Your inner trend line have to be blue. For me to know this is a trend line on the higher time frame, on the trend line on the lower time frame. You need also to know how to arrange your analysis. You get my point? So yeah, this is the analysis on USD JPY. And I guess this session was supposed to be 1 hour 30 minutes, and I already analyzed one, and I already analyzed one currency. So let's consider maybe the next. Yeah, someone said, okay, then we react after the market reaction. Yeah, we need to know how the market will react on this trend line, and then we have to react after the market have to act, and then we react depending on how the market will be active. Price action. You get it? So for the others who already say like we analyze GBP, JPY, GBP, USD. Let me see if let me check. Have a look on this is the expectation we have on GBP. I mean USD JPY. Let me have a look on. Let me add this on my chat list right now. GBP JPY. Let me see how the market is. Kinda nearly the same. Nearly the same. Let me see. From my point of view right now, if I can have to, the market is heading to this level. The market is targeting in the summers, targeting this level. And we are expecting a pullback somewhere here because the market have overbought. We will analyze GBP JPY in the next session because right now it doesn't have any setup. There is no setup on GBP JPY right now. So let me see. Let me see another currency. Let me see. Can you send the analysis in the Telegram? There is some of us using phones. Yep. Okay. Please add a few minutes on GU. Please add a few minutes on GU. All right. Let me check on that. Can you send the analysis? Yeah. This full video will be shared in the for you because you remember I've shared how you can grow a small account and how you can analyze. So the full video will be shared in the Telegram channel. After the session, I will share the full recorded video in the Telegram channel. So don't worry about don't worry about that. Don't worry about that. And then so GU, let me check on GU right now. There is no setup on GU, on this you see. Currently, do we have any? Let me see. From my point of view, right now, GU is targeting these two levels. Let me recap it as fast as possible from here. GU is targeting these levels. They have this level here, have this level here. So GU is targeting these two levels right now. So what we have here is, let me see. From the point of view right now, if I can just look properly, I had a penalty. Story. So GU is still buying. GU is still buying. Let me see my download EMA. Put in EMA. So GU is still buying. So since it have created from here, let me just recap as fast as possible on GU because the time is already over. And I'm that kind of person. If it's 1 hour 30 minutes, we need to be 1 hour 30 minutes because I consider people who have work and other things to do and they don't want to miss the session and I have to be clear on that. From here I had a pennant. Let me see on the 30 minutes time frame. I had a pennant here. It have been already broken. 30 minutes. So what we have here, GBP is gonna keep pushing to the upside. GU is gonna keep pushing to that. This is the level we have here. So we would have entered on the breakout before this one starts. We would have entered on the breakout here. We'd have, let me say, we would have entered on this can be would have entered on the breakout somewhere here, and then our stop loss. Can I keep my stop loss lower to be? Let me say I would have kept my stop loss here. Then my target somewhere 1 over 2. My target have to be this here. So this is the setup on GU right now. This is the setup of GU right now. It's the setup on GU right now. This level have been invalidated. So we have GU right here. GBP USD. This is what we expected. This is the move we're expecting on GBP USD right now. So since the market have already moved, you can consider to wait for the market to turn back to this level, to make a pullback to this level, and then start buying from here. Can see my point here? Can get me here? So what we have to do here is to wait for the market to pull back and then we can enter in the market. This is what we are expecting on GU right now. Okay, let me share this screenshot in the share this setup in the group. GBP USD buys. So what we need to do here, we need to wait for the market to create a pullback, and then that will be our entry. All right, so that will be all. That will be all for today. That will be all for today. For this, we have to wait for the test to the breakout. Yeah. Can we trade the GBP? We mean exact signals. We mean someone we appreciate. Yeah, okay. Can you send analysis in the Telegram? Okay. And you can tell us the reason why you didn't analyze gold. I mean gold. Oh, gold doesn't. Currently, I don't think so. I have a setup on gold right now. So yeah, that's why. And it was also because of the time limit we had. We will need to wait for the market to retest this level, and then we will enter the market. We have to wait for the retest of the breakout. Yeah, we need to wait, and then that will be the analysis for the day. That will be the analysis for the day. Anyone with the question now can ask before I end the session. If you have a question, you can ask. Thanks for this, brother. We appreciate. All right, welcome. Any question? Sugira, thank you for today. Thanks. We appreciate. Yeah, you are welcome. You're welcome. You're welcome. Any question, anyone who has a question can ask me before I end the session of today.